Okay, in this video, we're going to look in a bit more detail at the controls for the strategies, uh, and then, of course, also looking at what the trade history is telling you, and just describe some of the information that you can extract from that. All right, so just to recap, remember that if you want to have functionality at all, you need to make sure that the override switch is set to 1. Also, the strategy switch up top here is set to 1. That's for taking new trades, and that you do have a risk per trade. Once again, I don't recommend that you go above 1% on that, and there are fixed amounts that you can set below that as well, including 0.5%, 0.25%, 0.2%, and 0.1%. If it's set to 0, of course, you won't take any more trades. All right, so, and finally, of course, before I carry on, just a reminder that the ones next to the instruments mean that those instruments are being traded and new trades are being looked for by the software. If you don't want to trade a particular instrument, then just delete the one. If you are using some of the other software with higher time frames, then of course there will potentially be more instruments to trade here. Okay, so let's have a quick look at what the meanings are of these different controls. First of all, depending on when you look at this, there might be some changes here. Some of this functionality as well, I do vary on the different versions. In other words, what I'm saying is that some of it is actually disabled. But if you do really know what you're doing, then feel free to start changing these. If you don't see any change, it might be because you are using a version where the functionality is disabled and you just need to get in touch with me. Okay, so let's just run through these quickly. And you'll notice that they're identical for both the core and the overlay strategy in terms of these controls. You'll also notice I've got them set at default to exactly the same settings. Right, so initial stop method, this is something that does work generally that you can change. We are using the second option, which is the ATR stop at the moment, just to get consistency with the position sizing. When you use a fractal stop, ultimately you can have quite a lot of variation because if your entry is quite close to the previous fractal, that means your initial stop distance will be quite small and your position size relatively big. And conversely, if your entry is quite far from the previous fractal, then the distance, your initial stop distance, will be quite big and your position size small. So that leads to significant volatility. It also means that the amount of money that you make or lose per pip varies quite drastically from trade to trade, even on the same instrument. Whereas if you're using the ATR stop, then it is really being set, the distance to the stop, initial stop, is being set based on the recent volatility of that instrument. So it keeps it more consistent, certainly from trade to trade on the same instrument. But what it also means is that across different instruments, we are using the right relative amount of risk. So it takes into account the differences in volatility across different instruments. There's a significant difference, for instance, between the Euro USD and the GBP JPY in terms of the volatility. But because of this setting, it allows us to have a real risk that is being comparable from trade to trade across those different instruments. And that's really the goal. We don't want to have inconsistent risk taken across different instruments. Okay, so that's the first thing. As I say, leave it at 2. It's probably best in any case to leave it at that setting all around. Okay, so next is the targeting method. And of course, this is a big topic and makes a very big difference to the strategy. In fact, if you change from a fixed target to a trailing stop, you're actually using a different strategy. And as convex traders, you will know, of course, that we like to not limit our potential upside. So certainly for the core strategy, the appropriate setting to use would be 2, because we want to not limit our upside, and that's precisely what we've got set here. you'll notice that I'm not going to run through all of these for overlay again, but if you wanted to use a fixed target for the overlay, you could set that to 1, but I've found that setting it to 2 is really done wonders for the performance of the software as a whole. That is based on more recent data, it has to be said, because it's more recent testing, and over time we might find that decision changes, but for now that certainly seems to be the case. All right, moving on then to trailing stop method to break even. So you'll notice that there's 2 trailing stop method sections here, or switches, if you like. Trailing stop method to break even can be different, set differently to the trailing stop that you use after you've reached break even. In other words, to the ultimate take profit. And that obviously, you should understand from the training. We like to try different variations on how aggressively we get our stop to break even. Obviously, the more aggressive you are at getting your stop to break even, the more exposed your stop is to being stopped out prematurely. And finding that balance is really quite difficult. But the answer usually is counterintuitive. And because of that, if you just accept that it's counterintuitive, then the answer stops being difficult. So you need to just decide if you want to, how aggressive you want to be basically on each of these. Right, so the trailing stop methods that we're using for getting to break even is in fact based on looking at the previous candles. Now, from the training, you'll know that the GoPro channel can vary depending on the time frames we use. So we can use a 3-6 stop, a 2-5, and that depends on whether you've got a set number of consecutive closes in the direction of the trade or not. So if we're in a bullish trade and we're using a 3-6 trading stop, that means that if we have 3 consecutive higher closes in a bullish trade, then the stop will be trailed to the lowest low of those last 3 candles. Otherwise, it'll look at the last 6 candles. So you'll notice that at the moment we've got a setting of 1, which means that we are in fact using the GoPro channel, and that GoPro channel, however, has got a setting of 1 and 1 instead of 3-6 or 2-5. It's 1 and 1. And all that means is that we're trailing as aggressively as possible, which is that we're trailing the stop in a bullish trade behind the last closed candle. We're not looking at consecutive closes. We're just trailing it behind the last closed candle. Very aggressive. And that does mean, of course, that we're far more likely to get stopped out. But that setting is actually being done in conjunction with the fact that we're favoring certain pattern sequences that allow us to be aggressive in that respect, and the results are pretty good. Now, again, these are things that you can change, and you can test to see how the results vary. If you use a 1-3-6, that would be the standard 3-6 setting that you used to, or 2-5 on the higher time frames. You can obviously change those numbers if you like. All right, so that's if you're using a setting of 1, that's the GoPro channel. You'll notice from the instructions that you could also use a setting of 2. That's the smart stop. So you'll not really be able to do this manually. It's not something that you can do manually. There's an element of AI involved in here, but it keeps the stop trailed pretty tightly. We don't use the smart stop for, well, we haven't really found that the results of getting the stop to break even work best with the smart stop. We prefer to use it for our take profit. So once you are at break even and the smart stop reckons that it's now time to be able to move into a profit, it will do so. It's reasonably aggressive. So that's something that if you're finding that you're struggling with, we can discuss in future training. But for now, we just, you don't need to worry about that too much. You can just set it at 2 and forget it. See how that works for you. You can, of course, also change this to a 1 and then decide on a set of parameters such as 3-6 or whatever the case may be that you want to test. You could test, for instance, a 1-2. A 1-2 would mean that if you have a candle that's not in the right direction, then it's in the last two candles, it'll trail the stop to below the lowest low of the last two. The one thing I would also just want to reiterate here is that we never move the stop against the direction of the trade. So we don't revise it away from the take profit. We always look to either reduce risk or increase profit. We never increase risk or reduce profit. All right, so pullback, number of candles. Now, this again, I really recommend that you just leave as is. There is some extra training on this, but really it's in the definition of a pullback. How do you understand what a valid pullback is, and how do we take account of inside bars and engulfing bars in that? So at this stage, I am going to just recommend that you leave it set to 211. All right, and you can see for the overlay, we've got the same. Now, the difference between the core and the overlay, obviously, is that the overlay is a counter trend strategy. So if you are looking to get the balance in your equity curve that an overlay offers, then you can use the overlay strategy. So if it's something that you don't want to do, we can switch it off. So you just need to talk to us about that. At the moment, the functionality isn't in here for being able to trade one and not the other. It's our recommendation that you do trade them both together. But if you do want to only trade core or only trade overlay, then first of all, let us know, or in future versions, you'll probably see an option in here to be able to switch each one on or off. Okay, we've spoken about the other settings in the previous training, so that should be pretty clear. The other thing I just wanted to point out is what the trade history report looks like and what information you can get out of it. Now, this is a new account that's just been set up, so you can see it's blank. But if I was to go over here to another account on a different VPS, you will notice that some data is in here already. Let's just talk through it quickly. Many of these columns you may want to ignore, and if they are annoying you or getting in your way, then just talk to me about it, and I can hide them. But I'm just going to point out certain things that are quite useful. Obviously, you're going to get a lot of this information just repeating what you will see inside of the report inside your MetaTrader platform, but there's a lot of additional information as well that is related to the strategy. So as far as things go at the moment, you don't need to worry about the first column. That's for our multi-trade scaling in approach. It's not something that we found really improves performance. So you'll notice there's just a 1 there, which means that there's only one trade open per strategy, per instrument at any point in time. The hour obviously relates to the time, so what time of the day, and there's obviously restrictions that we have around that. Now, those restrictions vary between the core and the overlay. The order number, entry time, buy, sell, position size, etc. Where things start getting a little bit more interesting are on initial stop. This is not something that you will typically have in the, well, you won't have it in a MetaTrader report. So this is the stop that was calculated for your initial risk based on your initial stop setting. So be that the fractal stop or the ATR stop, this is what has been calculated. Now, the one thing to bear in mind is that with very, very few exceptions, if you're using the ATR stop, it's going to trail the stop almost immediately. So the initial stop is quite a bit more generous than what is typically required. So again, that just allows us to have consistency of position sizing. But usually the software will be able to, based on your trailing stop methodology, to break even, will be immediately moving that stop within seconds of placing the trade to reduce your open risk. And you'll see that's why we very, very seldom get a full loss of, if you're risking 1% per trade, for instance, that you actually get a 1% loss. Normally, your biggest losers would be around 0.6 or 0.7 of your initial risk. And that's even those are uncommon. So, but it's very important information for us so that we can, in fact, measure correctly the reward to risk ratio from trade to trade and over time. Now you can see target is 0. That's because we are only using trailing stops across all of these. So there is no take profit being set. Exit time, of course, is when the trade closed. And you'll notice that that with this particular time frame on the execution time frame, which is the 5-minute time frame, the trades don't run for very long, especially the losers. You'll see this one was what, all of 4 minutes. This one was 8 minutes, another 8 minutes, 6. That one's a bit longer at 11 minutes and 6 minutes. So those are the losers. Whereas a reasonably sized winner, you'll notice this one went on for 1 hour and 12 minutes. So again, that speaks to the fact that if the trade's not working, we get out as quickly as possible. But if it is working, we give the upside a chance to reveal itself. Okay, so, and there, of course, you can see the exit price as well as the profit. I think this account is this is a real money $5,000 account that was set up recently, and risking 1% per trade. So that would be $50 initial risk, as we will have a look at in a second when we get to those settings. Oh, bring it back here. All right, so that's that side. Then other side, this green dividing bar, you'll notice we've got quite a lot of information on the classes that were revealing themselves or showing themselves on the chart for each of these trades when they were taken. Now, you don't need to necessarily worry about this if you don't want to, but I know some of the folks are interested in knowing more about this. And if you are looking to even potentially trade on the higher time frames manually using this, it's quite useful to see what the software is doing. All right, so if you were to, first of all, look at the M55 down to M51, well, these 5 columns here represent the last 5 patterns in the sequence up until the moment the trade was actually taken. Now, that's worth knowing in context of the setup. Now, the setup designation that I've got at the moment is pretty simple. Anything ending in 01 is core. Anything ending in 03 is the overlay, and that's for the moment. I don't intend changing that, but just so you know. And then what comes before that is the last 3 patterns. So on the execution time frame. So if it says 341, it's a core strategy, and it was a 341 pattern setup. And you can actually see that here in the last 3 patterns on the 5-minute time frame: class 3, class 4, and class 1. So that's a 341. If we look at a 34101, if you see a 34103, again, you should see 341, but instead of being a core, it is an overlay. If you see a 23403, that's something I'll talk about in other training with you folks. But really, it's where we have got a kind of an engulfing bar. As you know, an engulfing bar we treat as a reversal, but the software can't spot it, especially if it's engulfing only relative to one impulse candle relative to the second last candle. So for those of you who've been through all the training on the lower time frame entries, an impulse candle can be looked at relative not just to the preceding candle, but the candle before that. So technically, it's not actually an engulfing candle compared to the previous candle, but it is if you use both the previous and the candle before the previous candle. So don't worry too much about that. It is something, though, worth knowing. You can easily go and look at it on a chart as well when you see that 23403 pop up or 23401. You might see 56101 if we've got that set up to go, because as you'll have seen from the other training, the 561 pattern likewise is also a reversal pattern. And depending on how the software has been set up for you, you might see those as well. All right, so that's all relative to the execution time frame. But what we also have here in these columns, and you'll notice it from the headings, is the last three secondary selection time frame patterns. And these are important as well, particularly the last pattern. We're not that worried about what came before the last pattern. It really is very much the last pattern that we look at the most, because the software is also looking at a primary selection time frame, which in this case is the 1 hour. So that's not something that needs to be taken account of over here, because it's all pretty fixed in that we only trade core outside of the HDC channel, and we only trade the overlay if the extremity of the last 15-minute pattern is outside of the overlay, outside of the HDC channel, but then trading counter trend, trading back into the channel. And that's something obviously we cover in the training for the strategies. But when it comes to understanding what the 15-minute pattern was, you just have to look at this column over here. You'll notice that on the core strategies, anything ending in an 01, it's a class 1 or a class 4 or sometimes a class 6. Whereas for the overlay, it is always a class 3 pattern. So just something to bear in mind over there. Okay, so the BMI setting is not something for you to worry about. It's to do with the AI. Remember, however, I did mention that if you want to be more aggressive, you can change the BMI setting in the dashboard, and that will give you, well, if you reduce it, it will give you more trades. It's a more aggressive setting. 0.5 is what we've been using here, so you can see that all of these are above 0.5. Each pair has got its own numerical designation. Don't worry about that. Again, you'll see strategy 1, strategy 2, which coincides with the 1 and the 3 under setup. Then the amount risked is exactly what it says. How much did we risk on that particular trade based on the position size, and obviously the fact that we've got compounding in place. All right, so that's just strategy information for you, something that's of interest. If you're not interested in looking at that, don't worry about it. It is absolutely not essential. If you really are just a fire and forget trader, and but if you want to understand how the strategies work in more depth, then that's something that will be useful for you to go and look at on the charts. You can effectively go and look at the time of execution of each one of these trades and go and map out what happened on the charts. Okay, so what do we have next? Well, let's move across slightly so you can see what this is all about. This really is our performance section. Now, what I recommend that you do first and foremost when you first set up your account, you can do it anytime, of course, is you change this top number, should be yellow, I guess, to the opening balance of your account. If you do that, then the closing balance should at all times reflect the closing balance that you have on your trading platform as well. So what this does now is, unlike, just going back a little bit here, unlike MT4, and therefore also this number under profit, we need to take into account more than just the profit or loss on the trade. We also need to take into account other costs, and in this case, it would be commission. So if you're trading with a commission-free broker, it is the same number, but the best brokers, especially your ECN brokers, you normally need to pay commission in addition. And we need to take that into account to work out the balance on our account and obviously our overall profit. And that's an absolutely essential number to understand. Okay, so let's talk through these step by step. Before we get into that, let's look at the numbers that you should be familiar with from the training, even in the foundations course. We need to know the success ratio and the reward to risk ratio and the expectancy of our trading. That is really the best measure on a short to medium term basis of how well your trading is going. It's not the final measure because it doesn't actually take the volatility of your equity curve into account. For that we would need to incorporate a measure like the CalMAR. But in the short to medium term, this is really what you're looking at. Okay, so this is really just like 1 week's worth of trading. You can see starting on the 16th and ending on the 19th, like 4 days worth of trading. So in that time frame, we only got a total of 10 trades, of which 4 were winners and 6 were losers. Now, that's almost perfectly representative of what we would expect from the strategy. The one thing that's not quite as good is the reward to risk ratio, which is on 2.8, whereas with the that trailing stop setting, the very aggressive trailing stop to break even that I showed you, where we're using literally trailing behind the last closed candle, we expect to have a reward to risk ratio of about 3.5 to 1. So 0.34 is actually not wrong. It's in this case, really, it's actually our average winners, which are a bit on the small side. This number is normally closer to 1.05, somewhere around or just over the 1 mark. And as you can see, it's just under that mark. And that means that our reward to risk ratio is not typical for the longer term. The longer term number there is about 3.5. So as you can see, therefore, our expectancy is a bit on the low side, but we're okay with that. It's a short term. This is literally, it's only 10 trades. You don't expect to see your averages coming out even as clearly as this over such a small sample size. Right. Okay. So that being said, then from trade to trade, we know obviously whether it won or lost. If it was a loss, we need to know the ratio lost. And that's why we also need to know that initial risk taken. And in this case, it was 0.32. In this case, that means 32% of the original risk. So if I risked 1% on the original trade, that is 0.32%. And it obviously gets worked out financially as well because the amount of money risked in this case was exactly $50. All right, so that's 0.32. We lost a total, and we're taking into account the commission as well. We lost $16.10. So it's actually rounded off slightly over there, the 0.32 number. You could see it's actually 0.322 if we take that extra 10 cents into account. All right, so you can see that we had 4 losers in a row to start off the trading on this account, followed by 0.83, 0.6, just under break even loser, a 0.94, a quarter of a percent loss, and then finally we got a reasonably decent winner to bolster that reward to risk ratio, or the average reward to risk ratio. And of course, then you can also see how that pans out from the opening balance. That's the actual profit or loss on the trade. That's the commission, and that's then the total of those two, and the number in front here is the remaining balance after the end of that trade. So if you take it all the way down to this point, you can see that our remaining balance is 5,087.64. So at the end of that week, we made just over 1%, which is not a huge amount, but it's fine. And then you can see that being shown on a graph. So for me, this graph really represents, based on the longer term performance that we've seen, we expect to make somewhere between 10 and 20% in a month. And in a month, we typically would get about 40 to 50 trades. Obviously, it could be more, it could be less on both of those numbers, but that's really what the dimensions of this graph represent. So after the first week, we're only a quarter of the way or so into the trading for this period, and we'll see what happens over the coming few weeks, obviously. Today being Monday, it's just the start of the next trading week. Let's see what happens. Okay, so I think that should be clear as far as that's concerned. The final numbers, just to take cognizance of course, the gross profit. That's gross. That's before commission. It's quite important that you know what your commission cost is. There it is in total. That's $35.70 commission for those 10 trades. And as a percentage of the gross profit, it's 28.9%. That too is on the high side, which coincides with what I said just now about our expectancy over here being a bit below average. The cost percentage that I'd like to see is below 20%. And over the long term, especially with the more conservative settings that we've got, I'd like to see it at least somewhere around the 20% mark. 28.9% is certainly a bit on the high side. Okay, so that's also taking into account the fact that we're using a broker here, which is pretty efficient. They've got very low spreads. Most of the time on these pairs, they're either zero or close to zero. And the commission is $7 per lot per round turn. So it's not bad at all for a retail broker. In fact, I don't know of anyone that's better, especially when you combine that with their excellent settlement, low slippage, and so on. All right, so that's that. Hopefully described well enough for you. Oh, this does happen to me sometimes. Let's just pause this while we fix it. Okay. Back there. Okay. There is just one other thing that I know that many of you want to see. And just need to show you on the dashboard. So for those of you who have got the appropriate subscription and are interested in what's happening behind the scenes, then this dashboard may be of interest as well. And it really is showing you live what's going on with in the market, and the patterns that are showing themselves that we're interested in for our trade. So we know, for instance, on the primary selection time frame, that we need to have a breakout of the HDC. So point D of our pattern needs to be outside HDC, especially for a call. On an overlay as well, we need to have the either point A or C needs to be outside. So it's obviously a class 3 pattern, needs to be outside of the HDC channel and then trading back towards the middle of the HDC channel. If either of those are met, then the first column over here will show a green block. Then if the 15-minute pattern is correct for the strategy, the next one will show, and then the 3 patterns, so 3, 4, 1, for instance, for our standard patterns would show up here as well. The colors vary depending on the strategy and so on. We also need that outside C close for the overlay. That will show if we have that, and then finally if we have an impulse candle. When we have a whole line of colored cells over here, it means that a trade is being taken effectively. You can see the build up to that. So for instance, if you see on the 60-minute chart, you can actually see what the pattern is. We don't really care about the primary selection time frame pattern. We just care about the fact that there is impulsive price action taking place, which is why we look for a breakout of the HDC channel. On the secondary selection time frame, however, we are interested in a class 3. Obviously, would be something that we're interested in for an overlay. Whereas for a core strategy, we need to have a 1, 4, or a 6, and very often we even restrict that to a 4 and 6. And then, of course, the execution time frame, where we look at the last 3 patterns, we're looking for a 3, 4, 1. A 1, 4, 1 would indicate an ongoing trend. So you can actually see we had a 5, 6, 1 setup before that. So if you took a 5, 6, 1 setup, then the trade would have led into an ongoing trend, because that class 1 pattern was followed by class 4 and has been followed by another class 1. So here you can see the history of the patterns with the prevailing pattern, the one that's currently showing itself in the last column over here. And that too can be quite useful when looking to develop your eye and you can see how they actually change as the market is moving and the software is reassessing exactly where we're at with those. All right, so that's pretty much it. If you're wondering what all the colored boxes are at the bottom over here, then really that's just a map of how patterns can concentrate into the more restrictive patterns, such as the class 1. Class 1 can only come from a class 4 or a 6A, but in itself it can go into a class 4, which is then can only go into a class 1, or a class 1 can become a class 3, class 5, You can see we're about to see a change. There we go. We just saw a quick change over there as the next 5 minute candle opened up. So yeah, this is really just something that if you're wanting to learn how to trade manually, you need to give some thought to is what patterns follow on from each other. So it's you can't get anything other than a class 1 pattern after a class 4 pattern. Doesn't mean that price is going to carry on. Doesn't mean you're going to get the next CD leg becoming an impulse wave. Not necessarily, because that class 1 could turn into a class 3, which would mean that it never went anywhere and your trade has probably been stopped out for a loss. Or it could turn into a class 5. A class 1 going into a class 5 would mean that the trend has gone weak and you might have made some money out of it, a small winner, maybe break even. But it's only really when a class 1 takes off and ultimately carries on going long enough so that the next retracement wave is a class 4 that we get our significant winners. So it's just worth bearing in mind. There's a lot to this topic. Obviously, it's enough for an entire training session. All right, so there you have it. That's quite a complete, I think, overview of how to use the software, the Trade Manager. So if you do have any further questions coming out of this, then there is a comment section below. Please do use it, and we will either answer it there, or if further training video is required, we will do that. All right, hope you enjoyed it.